Hey everyone, welcome back to Talk Tickers. We break down those earnings calls so you don't have to.
That's right.
And today we're diving into, you guessed it, Costco. Second quarter, fiscal year 2025. A lot to unpack here.
Yeah, for sure. So kicking things off with the headline numbers, Costco reported net income of $1.788 billion.
Okay.
That translates to $4.02 per share.
All right.
Which is, a decent bump up from last year.
Yeah.
Net sales also looking pretty healthy, reaching $62.53 billion. So that's a 9.1% increase year over year.
It seems like their growth isn't just in those top-line sales numbers, though, right?
Yeah, definitely. You hit the nail on the head. When you look at their comparable sales across all regions, actually they're up by 6.8%.
Wow.
And when you strip away the effect of gas prices and currency swings, stuff that can kind of muddy the waters, that comparable sales growth actually jumps to 9.1%.
There you go, okay.
Another thing that really jumped out was their e-commerce business. Their comparable sales, they were through the roof, like 20.9% growth or 22.2% if you adjust for those same factors we just mentioned.
But they're really killing it online, it seems.
Absolutely. It looks like their online strategies are really, really starting to pay off.
Yeah. Now, we got to talk about memberships. We all know that's the heart and soul of Costco's business model, and it seems like they're growing steadily there, too.
Couldn't agree more. I mean, membership fee income for the quarter hit $1.193 billion. That's a 7.4% increase compared to the same period last year.
That's huge.
It is. And, that recent fee increase, the one that everyone was talking about, that played a part, contributing about 3% to that growth. But here's what I think is even more impressive. Their member retention.
Okay, yeah.
I mean, the U.S. and Canada are sitting pretty at a 93% renewal rate.
Wow.
And globally, it's 90.5%.
That is pretty impressive.
Yeah, it shows how sticky their membership base really is. They've also grown their member count to 78.4 million paid households. And those executive members, the ones who shell out a bit more for extra perks, they now represent almost half of all paid members.
47.1% to be exact.
Yeah, you got it. And get this, they're responsible for almost 74% of Costco's global sales. It's incredible.
That's pretty remarkable.
Yeah. Oh, and before I forget, their gross margin also saw a slight increase this quarter, and they managed to rein in their SG&A expenses compared to last year. So good news all around on that front.
All right, so let's dive a little deeper into some of these numbers. You touched on operating income seeing a significant jump. What drove that?
Yeah, so operating income did see a solid boost, but there's a bit more to the story.
Okay.
You see, it was partially offset by higher interest expenses and, just other financial costs compared to the previous year.
Yep.
Plus, those fluctuating exchange rates, those always throw a wrench in the works. Those had a negative impact on their international profits when they had to translate everything back into U.S. dollars. So, yeah, while the core business was humming along, there were definitely some headwinds in the mix.
Makes sense. Now, when we break down those comparable sales figures by region, was there anything in particular that stood out?
Absolutely. So in the U.S., comparable sales were up 8.3%. And if you take gas prices out of the equation, it bumps up to 8.6%.
Yeah.
Canada was a standout with 10.5% growth. And then, lumping all those other international markets together, they posted a respectable 10.3%. But again, both of those numbers, those are adjusted for gas prices and those pesky exchange rates.
So it sounds like they're seeing healthy demand across the board.
Yeah, pretty much. And when you zoom in on customer behavior, it gets even more interesting.
Okay.
Global traffic to Costco warehouses was up by a solid 5.7%. And the average transaction, that was up by 1%. And again, if you back out the gas and currency effects, that average transaction would have been even higher. So it tells me that people are either buying more stuff or they're splurging on those higher ticket items.
I mean, I know I do that at Costco.
Yeah, who doesn't? All right, now let's talk about that membership fee increase. It was a big topic leading up to this call. So how's that actually shaking out in their financials?
Yeah, everyone wants to know.
Well, it's kind of a gradual rollout. See, because of how accounting works, they can't just recognize all that extra revenue from the fee hike in one go. So they're only recognizing a portion of it each quarter, but the majority of that financial boost, that's expected to hit over the next 4 quarters.
Okay.
And they're thinking the most significant impact will likely be felt in the latter half of their fiscal year. So investors are definitely keeping a close eye on how that unfolds.
Yeah, for sure. Now, profitability is always key. And you mentioned there were some details around their gross margin. What's the story there?
Right. So when you look at their core merchandise profitability, what they internally call their core on core gross margin, that actually dipped a little bit.
Interesting.
Yeah, a couple of things at play there. First, they're making these strategic investments in their supply chain, making sure they have enough product to meet that strong demand we were talking about. And second, there's been a bit of a shift in what people are buying.
How so?
Well, they're seeing a slightly higher proportion of those lower margin non-food items being sold compared to, the higher margin food products.
Okay, I get it. So it's a bit of a balancing act.
Exactly. However, the good news is that thanks to those strong sales volumes and their ability to control costs in other areas, their overall reported gross margins still edged up a bit. Now, on the expense side, they did a pretty good job managing their SG&A.
Yeah.
Much of that's down to better labor efficiency and just overall cost discipline. But there's a caveat.
Yeah.
They recently implemented a new employee agreement, and that's expected to put some upward pressure on SG&A costs in the coming quarters.
Right, of course. Now, what about their investments in the business itself? Any insights into their capital expenditures this quarter?
Yep. They plowed $1.14 billion into CapEx during the quarter, and their projection for the full fiscal year is hovering around $5 billion. So, we're talking new warehouses, tech upgrades, the whole shebang.
Yeah, keeping everything running smoothly.
Exactly. Oh, one more thing on the financials. Their tax rate for this quarter was a bit higher than last year.
Okay.
That's because last year they had this one-time tax benefit, so that's kind of skewing the comparison a bit.
Right, that makes sense. So shifting gears a bit, let's talk about what people are actually buying. It sounds like non-food items were a big growth driver this past quarter. What categories were especially hot?
You're spot on. Those non-food categories really stole the show. We're talking mid-teens percentage increases in comparable sales.
Wow.
Yeah, big ticket electronics were flying off the shelves. Think big screen TVs, all that jazz.
Yeah.
Gold and jewelry were popular, gift cards, toys, housewares, appliances.
Okay, so a lot of discretionary spending.
Yeah, it seems that way.
Yeah.
And sporting goods and home furnishings, those also did really well.
Right. So clearly people are still willing to spend on those fun items.
Yeah, absolutely. Now, what about those, those everyday essentials, those grocery items? How did those fare?
Yeah, good question.
Well, their fresh food segment saw really solid growth, high single-digit growth. Meat, bakery items, and produce were the real stars there.
Okay.
It's interesting, though. Within meat, there was a noticeable trend towards more budget-friendly options.
Yeah, that tracks with what we're seeing elsewhere. Now, food and sundries, those packaged foods, everyday necessities, how'd they do?
They saw more moderate growth, low to mid single digits. But, Costa's always about providing value, right?
Yeah.
And they're putting their money where their mouth is. They've been lowering prices on some of their Kirkland signature items.
Okay.
And they're also ramping up their sourcing from local suppliers.
Right.
So they're really trying to keep things affordable for their members.
Yeah. Now, we can't talk about Costco without talking about Kirkland Signature. It's their crown jewel. What's the latest there?
Well, Kirkland's signature, it just keeps on trucking, outperforming the overall business.
Like it always does.
Exactly. They've been busy innovating too.
Uh-oh.
They've made some improvements to their diapers. They've introduced Kirkland signature French fries.
Okay.
Even alcoholic beverages.
I got to try those.
You gotta. It just shows you the trust that members have in that Kirkland signature brand.
Yeah, absolutely.
Now, looking at their other businesses within those giant warehouses, the pharmacy and the food court departments, those were the growth leaders.
Yeah, I can see that.
Gas stations, not so much. Comparable sales were down there mainly because of lower gas prices.
Makes sense.
Now, overall inflation for their merchandise, that was in the low single digits.
Okay.
Fresh foods, those had the highest inflation rates, as you might expect. They also mentioned that their supply chain is pretty stable right now.
Okay, good.
And they've proactively increased inventory levels, especially in non-foods, just to make sure they can keep up with demand.
Always good to be prepared.
Absolutely.
All right, now, in today's world, we got to talk about digital. E-commerce is such a crucial part of retail now.
Yeah, it's everything.
So how's Costco adapting?
Well, they're definitely making moves. You know that new warehouse tool they added to their app?
The one that shows item availability and pricing?
Exactly. That thing has been a hit. Members love it. They also ran their first test of personalized digital multi-vendor mailers. Basically, they're using data on what members have bought in the past to create these targeted promotions.
Okay, so getting a little more sophisticated with their marketing.
Yeah, exactly. And their e-commerce sales, those were strong in categories like bullion, but also in some, more everyday categories like home furnishings, small electrics, hardware, and sporting goods.
So a good mix.
Yeah. Oh, and their Costco logistics operation, the one that handles those bulky deliveries, they had a record-breaking holiday season. So, they're clearly able to handle those big online orders. And then you have Costco Next, their curated online marketplace that's continuing to expand with more vendors and more products. So, yeah, they're definitely not ignoring the digital space.
It sounds like they're really embracing it.
They are.
Now, beyond those traditional sales channels, are they exploring any other ways to boost their revenue?
Absolutely. They're always looking for ways to innovate.
Okay.
They talked about some improvements they're making to their co-branded credit card program, the one that offers cash back rewards to members.
Yeah.
That's a big driver of loyalty and spending.
For sure.
And they're also really ramping up their efforts in retail media. That's where they offer advertising opportunities to their suppliers, both on their website and in other digital channels. In fact, they've got multiple offsite campaigns running as we speak.
Wow.
So they're definitely seeing potential in leveraging their member data to generate some advertising revenue.
Yeah, I mean, it makes sense. They have such a loyal customer base. Now, the earnings call also touched on their sales performance in February, right? After the second quarter ended.
They did.
What did they share there?
Well, February sales were still looking strong,
Okay.
up 8.8% year over year.
Okay, so that momentum continued.
Yeah, and the comparable sales trends were pretty much in line with what they saw in Q2, with the U.S. leading the pack in terms of growth. E-commerce was still going strong in February, too.
Right. Any interesting regional trends?
Yeah, so within the U.S., the Midwest, Northeast, and Los Angeles, those were the standout regions. Internationally, Mexico, Taiwan, and Korea, they all had really strong results.
When you look at those numbers in their local currencies, right?
Right, exactly. And in terms of what was selling, it was pretty much a continuation of those trends we saw in the second quarter.
Yeah.
Non-foods, those were still the big driver.
Got it. Now, the Q&A session with analysts, that's where we often get the real juicy insights.
Oh, yeah.
What were some of the key takeaways from that?
Well, a few things stood out. First, it's clear that consumers are still willing to open their wallets.
Okay.
But they're definitely prioritizing value and quality. There's also this sense that people might be eating at home more.
Makes sense, given the economic climate.
Yeah. Now, Canada, that continues to be a bright spot for them.
Okay.
And then there was that dip in their core-on-core gross margin. Management addressed that head on. They said they don't see this as the end of margin expansion. They attribute it to those strategic investments they're making and also the changing product mix. They did mention that weather had a small negative impact on sales in February, but they said that most of that was quickly recovered.
Yeah.
Now, tariffs, those are always a hot topic.
Yeah, of course.
Costco's approach seems to be working closely with suppliers to minimize any impact on their members. And their treasure hunt strategy with those opportunistic buys, that gives them some flexibility to navigate any tariff-related issues. The timing of Chinese New Year, that also had an impact on their February international sales numbers.
Okay.
But they emphasized that long-term growth in international markets, that's still a key focus for them.
Yeah.
And they've got plans for more warehouse openings. Now, consumer electronics, growth is a bit slower there right now.
Right.
But they believe they're actually gaining market share.
Interesting.
Yeah, and they're looking at ways to introduce successful products from one international market into others.
Oh, like cross-pollination?
Exactly. Now, those digital multi-vendor mailers, those are proving to be really effective.
Right.
They offer more flexibility than the traditional print versions. And they're even starting to personalize those offers. Kirkland's Signature, they're all about expanding into categories where they can offer that unbeatable value and quality. They've got a pretty high success rate with new Kirkland items, but they're not afraid to to cut those that don't perform.
Yeah.
And they see a lot more room for Kirkland Signature to grow, especially in non-food categories.
Yeah, I mean, who doesn't love Kirkland?
Seriously. Now, those upcoming wage increases, those are going to put some pressure on their SG&A expenses, but they're focused on boosting productivity to offset that. Inflation, they said that ticked up a bit during the quarter. Fresh foods, those saw the biggest jump. Non-foods have actually been deflationary, but those prices are starting to level off now. Alternative media, they see that as a growth opportunity, but their main goal is to reinvest that value back into their members, not just create a new high-end revenue stream.
I like that.
Yeah, it's a good philosophy. And one of their big priorities is improving checkout speed and just overall efficiency in their stores.
Right. No one likes waiting in line.
Exactly. Technology's playing a role there. Now, they aren't planning to extend store hours right now.
Okay.
But they haven't completely ruled it out either. And they've actually seen some positive results from extending hours at their gas stations.
More people filling up.
Yep. And lastly, they're confident that their prices are still very competitive.
Good.
They've got this proactive approach to pricing, all about delivering that value to their members.
Yeah, that's always been their core value proposition. So stepping back and taking all this in, what's the big takeaway for investors?
Well, I think the main message here is that Costco's business model is strong.
Okay.
That membership model, that provides a very predictable revenue stream, and their commitment to value, that's really resonating with consumers in this current economic environment.
Yeah, that's certainly what we're seeing.
Yeah. Their e-commerce growth, that shows they can adapt to those shifting shopping habits. And they're not just standing still. Their international expansion, that's a huge long-term growth opportunity.
Sure.
Now, those wage increases, those are going to have an impact on their expenses, but they also show that they're committed to their employees.
Yeah.
And that can lead to, better retention, better service quality in the long run. But investors will have to keep an eye on inflation and any potential tariff impacts. Those could affect profitability.
Right. Of course.
But all in all, their investments in technology and their willingness to explore those alternative revenue streams, that shows me they're thinking ahead.
Yeah, they're not just resting on their laurels.
Oh.
Okay, well, that's a great overview of Costco's performance and their plans for the future. Now it's time for everyone's favorite segment.
Oh, yeah.
It's time for This Is Not Financial Advice.
The disclaimer's right there in the name.
Exactly. This is where we put on our speculative hats and toss around some, let's call them outrageous but plausible trade ideas.
Yeah.
Based on, what we've learned from this earnings call. So what's your wild pitch this time?
Okay, so Costco's e-commerce is booming, especially in higher value items like bullion. And they're getting more and more into personalized digital marketing.
Yeah.
So here's my thought. What about going long a company that specializes in insecure at-home storage for precious metals?
Okay.
And pairing that with a short position in a traditional brick and mortar pawn shop chain.
I like where you're going with this.
Right.
Yeah.
So the thinking here is, as Costco sells more and more bullion online, some of those customers, they're going to want a safe and convenient way to store that stuff at home.
Makes sense.
And that's where that home storage company comes in.
Right.
Now, those pawn shops, they rely on those in-person transactions.
Yeah.
And they often cater to a less affluent customer base. So as companies like Costco, with their focus on value, as they move into things like precious metals, those pawn shops might start to feel the squeeze. It's a bet on those changing dynamics in e-commerce, especially for high value goods, and also on how people are managing their assets these days.
I love it. A play on the intersection of e-commerce, precious metals, and home security, all contrasted against that traditional financial service model.
Exactly.
But got to remind everyone, this is all hypothetical. This is just for fun. This is not financial advice. Please do your own research before making any investment decisions.
Couldn't agree more.
So to wrap things up, what were your key takeaways from our Costco deep dive today?
Yeah.
What should listeners be thinking about?
Well, Costco is clearly doing a lot of things right. They're adapting to the changing retail landscape. They're focused on value and they're investing in their future. But, it's always important to stay informed and do your own due diligence.
Couldn't have said it better myself. That brings us to the end of another episode of Talk Tickers.
Join us next time for another exciting earnings call breakdown.
We'll see you then.